Hi there, good morning. You've tuned in to ET Now, and this is Buy Now, Sell Now with me, Cheryl D'Souza. Along with me, I have Shrishti Sharma. Very good morning to you, Shrishti. And actually, it's even a brighter and a much better morning coming in for Paytm, especially Paytm shareholders, given the fact that the stock has finally actually snapped out of that lower circuit streak that it had been witnessing over the last three trading sessions. Today, the stock has actually rebounded. It's all rebounded as much as 18% from the day's lowest point. It actually was trading higher by about 7% or so last time I checked. Now it has given up some of those gains, nevertheless holding on to positive territory. You have a slew of notes have come in on Paytm, but one of the most important note that's actually grabbing a lot of eyeballs and attention today has to be the Bernstein note that is coming on Paytm. And what Bernstein is saying that they are maintaining an outperformance stance on Paytm with the target price of around 600 rupees per share, and they are believing that the stock is back near doomsday's valuation. But what's the rationale behind maintaining that buy stance on this particular counter? Let's bring on board the analyst himself to talk more on this. And we have Pranav Gundlapalli from Sanford C. Bernstein joining us. A very good morning to you, Pranav. Thank you so much for joining us on ET Now. And let me first actually quote a line that is coming on your particular note, where you've mentioned that you all are now going to be leaning towards the buy camp when it comes to Paytm. Do you think that the worst is already priced in for Paytm? Because remember, there are a lot of rumors floating around on the license cancellation also that could be likely for Paytm. So do you think that everything is priced in at these levels right now?
Yes, I think at these levels, you're almost at a point where even if you assume the entire payments bank gets shut down and all the business which were housed in that particular entity, which is your wallets and some of the prepaid instruments, go off, and you still can see significant upside to where the current valuation is. Right. Secondly, we don't expect, assuming the required licenses come in. I'm not talking about the payments bank license, but they're able to continue with the UPI payments largely. I don't see a big market share attrition either, just given that the way the market is structured. And therefore, I find this to be attractive valuation. So the buy call is a combination of the extent of correction that the stock has seen and the limited impact that we see from the payments bank entity going away. Now, there could be further downside if you see this action spreading to other parts of the business, and there is no reason to believe that's indeed the case at this point in time.
All right. Thank you so much for your take, Pranav. This is Shrishti also joining in. But in your SOTP calculation, how much value will you give to the wallets business versus the rest of the business? And what do you make of these reports of the sales of the wallet business? Is it really possible?
See, I think the wallets and the entire set of business. So there are two parts to this payments bank, Srishti. I think there is one which is products that are housed in the payments bank. So wallets is one, the savings and current accounts being the other, some of the prepaid instruments, FASTag, etc. The other things that sit inside the payments bank business today, which are at risk, right? So now whether they can be resumed or not is a question, and probably will take time for it to play out. But we are assuming that that's broadly gone. I mean, there's no near-term comeback for those products. Now, those components probably account for less than 10% of the payment GMVs and less than 20% of payment margins in itself, right? So I think that's a much smaller impact. And if you look at, bulk of the valuation for this business comes from the loan distribution business. And if you, look at EPS for the later years, a lot of it comes from the lending business. So a portion of payments revenue going away should not be that negative in itself, unless it has implications for the other businesses, which is where I talk about this spreading into, say, the lending business, if partners choose not to work with Paytm, or if the regulator continues this action in other segments. That's the downside scenario, where the likelihood appears limited, which is why my SOTP I don't see a big reduction in the other components of the model.
Pranav, while we speak, we have agencies' reports coming in where they are attributing it to sources that Paytm founder and officials have said to have met RBI, and this in order to address the roadmaps to address the regulatory concerns that they have actually pointed out on. So keeping that also in mind, what next do you think for Paytm now? Do you think that the trust deficit will continue to plague the growth even post these issues are resolved, given the fact that they're really acting pretty fast on it, and it has shaken a lot of consumer confidence as well, and investors also?
See, investor confidence will take a while, right? Because if you are in the financial services business, the two things you don't want to see happening is asset quality issues and regulatory issues. And those two will take a long time to be mended, and therefore that becomes an overhang. On the consumer and merchant side, see, I think the way the Indian payment space has evolved, I don't think there's ever been a massive amount of trust or a need for trust in these platforms. Because, see, the reason the adoption of Paytm or its competitors, PhonePe or Google Pay, has happened at the pace it has happened is because the consumers and merchants retain money in their bank accounts. So the trust remains with the bank accounts. So I don't think that part is going to change. And therefore, the trust discussion, in my view, is largely limited to the payments bank accounts that, where I do see them migrating to other banks. But that should not be a material impact on the business itself. Yes, you will have a short-term disruption, but as long as money is cut to a merchant's bank account that he knows and he trusts, I think all the others should be easily solvable.
And lastly, Pranav, we understand that the nodal banks are a bit skeptical before tying up with Paytm now. So how big an issue this can be?
But yeah, see, I think there we assume that most of these issues can be sorted by end of this month, which is the deadline they have. The idea here is that, or the reasons here for our view is that one, the business that Paytm does in terms of customers and merchant segments is not too different from what its peers do, and therefore should eventually find a bank which is happy to run their nodal accounts. Number one, and number two, even from a system perspective, they are a reasonably large component of the UPI payment system, right? So they are about 30% of the P2M market, P2M transactions. So I think there would be enough efforts or enough assistance provided to make sure that the payments continuity is maintained, not just at a Paytm level, but across the overall UPI payment story, right? You don't want that to get disrupted. So I think you will see some sort of a partnership emerging. Now that remains a risk. Like I said, the downside that I see here is if the UPI payments don't continue post-Feb, remains an outside chance. But if that does play out, then there's obviously going to be a lot more downside than where the stock is today.
Lastly, just to get your final word then on this, Pranav, first, in the fintech space, will Paytm be one of your top recommendations at this point in time, given the correction that it has already witnessed? And also, what could be an upside target if for Paytm? 600 is what you are penciling as of now.
Yeah, 600 is what I'm penciling in. I think the valuations make it really attractive and make it probably the top pick amongst the fintechs. If you compare them with the private market valuations for most of their peers, they remain extremely cheap. In terms of the catalyst and where I could see upside is, I think you will see that I think the March 1st or in the first quarter, last quarter results come out. I think we'll quickly get to know how much of a disruption it has been to the business, and any evidence that there's been minimal attrition in market shares or disruption to routine businesses should drive a significant upside from the current levels.
Right. Thank you so much, Pranav, for joining us on the show, actually giving us a rationale behind that note coming in on Paytm, and also what's Bernstein's take coming in on that particular counter. So thank you so much for joining us, and also specifying on the crucial parts of that particular report. So that was Pranav Gundalapalli from Sanford Bernstein talking about Paytm, and the stock has seen a smart recovery from the day's lowest point. But for now, we'll slip into a break on this edition of Buy Now Sell Now. When we come back, we'll start taking your queries. Don't go anywhere.
Welcome back to Buy Now Sell Now show, where we get you answers for all your stock related queries. But before that, viewers, it's time for the Buy Now Sell Now lens, and today we're going to be focusing on the OMC space, because stocks like BPCL, HPCL as well as IOC are seeing no stopping. Even in today's trading session, they are inching upwards, but OMCs have been leading the PSU rally this year with no major change in the fundamentals and largely the stable macros as well. But why are they on the tear? Let's get in more details from Somit Sarkar, and let's understand that at this point in time, how are the valuations stacking up as well? So Somit, take it away.
Well, as you know that OMCs have been leading the rally in the PSU stocks of late, that is in 2024. But what has changed really for them fundamentally, if you see, largely on the GRM side and on the marketing side, the things are pretty much similar. The gross refining margin, that is Singapore gross refining margin, are largely stable around the $8.5 to $9 per barrel mark, while the marketing margin on petrol ranges in around 8 to 9 rupees per litre, while for diesel it is around 3 to 4 rupees per litre, which is largely the same what it was in 2023 last 3 months. So nothing much has changed for them fundamentally. Then why the rally? Now this could be possible valuation catch up that we have been seeing, because at the start of 2024, if you see, the valuations of these oil marketing companies were either below or near the historical averages, that is the 5-year averages we are talking about. Now in case of Indian Oil Corporation, if you see, at the start of 2024, the valuations were at around 6.3, which was at par with its 5-year average, but now the valuations have shot up to around 8.5 times, and it's very near to its peak of around 9 times, that is the 12-month forward P we are talking about. When it comes to BPCL, the valuations were below its 5-year average at around 7.3 at the start of 2024. Now the valuations have shot up to 8.6, which is still below its 5-year averages, and in fact below its peak valuations of 13 times as well. And in case of HPCL, if you see, the valuations at start of 2024 was at par with its 5-year averages. Now the valuations have shot up to 6.9, but still below its peak valuations of 8.2. In case of margin of safety, that is the difference between the 200 DMA, 50 DMA and 100 DMA of the stocks to the current market price, Indian Oil Corporation is providing the least margin of safety, because the RSI is not only at 83, but the stock is nearly 75% away from its 200 DMA. Apart from that, it's nearly 59% away from its 100 DMA. Now BPCL also has an RSI of 83, and it's 53% away from its 200 DMA, while in case of HPCL, the RSI is at 71, and it's around 71% away from its 200 DMA. And lastly, when it comes to the analyst view or the consensus view, Indian Oil Corporation is providing the most downside at this moment. If you see the analyst consensus target price, that stands at close to 141, while the current market price is around 174, which suggests a potential downside of nearly 19%, while in case of BPCL and HPCL, the potential downside is anywhere between 7 to 4%. So keep an eye out for all the oil marketing companies, especially Indian Oil Corporation.
Thank you so much for that, Somit, for exactly pointing out what's exactly happening in the OMCs, also comparing the fundamentals as well as all the key technical data point that one needs to watch out for. So that was all about OMCs, but let's open the floor and ask our experts, what should you do with OMCs? Is the valuations stretched? Is the rally overdone? Or it's time to stay put with your holdings? We have Shahina Mukaddam as well as Kunal, both are joining us on the show. Very good morning to you, Shahina, as well as Kunal. Thank you so much for joining us on ET9. Shahina, let me come first to you. You had actually Somit explain about what's changed, or rather not changed, in the fundamentals when it comes to the OMCs. And we've actually seen all of these players actually play a catch-up rally. When you compare it to the rest of the PSU pack, these OMCs have actually started rallying pretty late compared to the rest of the pack. But do you think now the rally is overdone, or you think that there's more steam and the fundamentals warrant such a rally?
Well, as you saw, the catch-up, if you see on a 1-year basis, the performance has been very good. The stocks have almost doubled, in fact, more than doubled, HPCL, IOC. At the same time, if you see the valuations, the comparative chart, of course, Somit did give us, but in my view, valuations are still not too expensive on a price to book basis. All three are around 1.2 times price to book. So that actually limits any downside. Now, given what the future is likely to be, if we see the third quarter numbers, they were more or less in line. I mean, none of the stocks did very well in terms of improvement on a QOQ basis. Of course, on a YOY basis, there was a substantial improvement, but that is more or less factored into the price. Going forward, what I believe, and my topic would be HPCL at current levels, is largely because if we have crude oil prices remaining below the $80 mark, which is likely, considering how it has moved in the last couple of weeks. So there, I believe, then among the three, if one has to buy and hold, I think HPCL would be a better bet. The remaining two may give a smaller return over the next 1 year. At the same time, downside in my view is limited.
So valuations still look comfortable at this point in time, and HPCL could be the better bet amongst the same. That's the view coming in from Shahina. But Kunal, on the technical front, like Soumit was highlighting, all these are in the overbought territory when we see that from the RSI parameter. What's your take on the OMCs? Do you believe that keeping that aside, there could be some more steam left for the run-up, as well as any targets on the same?
Good morning. So I'll throw an interesting perspective over here. 2003 was a time period where many of these OMCs had a very similar kind of an RSI structure, and the second was in 2016 end or 17 start is where the RSIs for OMC was around the 80 plus, 83 plus kind of levels, where it is trading currently right now. Interestingly, in 2003, when the stocks like IOC, the stock was I think around 24-25 rupees at that point of time, and then in the subsequent next 2-3 years, the stock went up to as much as 67 to 75 plus levels, and then it kept on rising up higher on a yearly basis. 2017 was a time period where the stock actually found a top and it corrected sharply because of the overbought nature of indicators. But my sense is that currently the charts for OMCs could probably replicate what we've seen in 2003 for themselves. So what we could probably be looking at is a start of a major multi-year uptrend for these OMC stocks. Yes, these stocks may get into a zone of overbought every now and then. They may cool off, consolidate, correct a bit. But then I think from a longer term trajectory from here to the next 3 years plus, I would expect these stocks to do substantially well for themselves from current levels.
All right, so there's a view coming in on OMCs from both of our experts. With that, let's open the floor to take all of his stock-related queries. Viewers, you can write to us on the WhatsApp number that will be flashing shortly on your screen with your stock-related queries. So let me take the first query coming from Ephraim. He's writing to us from Dubai. He's a long-term investor, Shahina. He has 20 shares of Bajaj Finance at an average price of 7,191 rupees per share. He now wants to know whether he should look to buy some more of Bajaj Finance in his portfolio or look to average out or exit right now.
Well, I would not suggest that he adds at current levels. It is better to wait for dips. It's a fundamentally strong stock, but at the same time, it's overvalued. And I believe there is, in fact, likely to be a correction. So I would prefer to buy some banks rather than Bajaj Finance at current levels.
Right. This one is coming from Sachin, writing to us from Karnataka. Kunal, he has 38 shares of MRPL, which he's purchased at the levels of 60.7 rupees per share. He wants to know whether he should look to book out profits from this counter right now.
I think you should hold on. The stock has just confirmed a breakout of a major multi-year resistance around the 145, 40 odd mark. It's currently trading at 190 plus levels, so which means that the stock is substantially above those breakout levels, indicative that this could be a start of a strong uptrend. I would suggest to hold on.
All right. This one is from KB Singh from Chandigarh, who has PCBL at the levels of 118 rupees per share. He purchased this a year ago, 2,500 shares. Kunal, he wants to know whether he should book profits at these levels or hold on for another 6 months.
I think you should hold on for another at least couple of years, if not more, because the stock has just confirmed a very big breakout coming out after, I think, 8 or 9 years of consolidation. 2013 is where the rally started for PCBL, when the stock was, I think, at 2 digits, 10 or 12 rupees, moved up to 130, 37, then consolidated there for a span of 5 or 6 years. And then I think 2022 end, 23 start is where the stock had managed to give a breakout. So which means that the patterns are quite attractive from long-term basis. I think you should continue to hold on.
One more query coming specifically for you, Kunal. I'm not sure whether you tracked this one or not, but this query is from Anand. He wants to take on Mobile Global. He's holding 1,000 shares at an average price of 90 rupees. Should he continue holding on or exit?
See, it doesn't make sense to hold on to these stocks from a portfolio perspective. You might look at these stocks as a trading play, and I think purely in trading, if you get in a very short span of time a gain of 15-20% in such kind of stocks, and that too in a market scenario where we are trading right now, I think those are good gains purely for a short-term trader. So it all depends on how you define on-mobile as part of your overall construct of your portfolio. If it's just a short-term trading play, I would believe that could be a very good zone where you may look to book out profits on the stock.
All right, this one is coming in from Sabarjeet saying he's writing to us from Punjab. He has 200 shares of Butterfly Gandhimati since the last 6 to 7 years. Now he wants to know what should he do with this particular counter. Should he continue to hold on to it or look to exit? What's your take on this particular counter, Shahina?
I think you should continue to hold on to the stock. It is going into some corrective phase, but at the same time, I believe it should do better going forward in terms of numbers, so one can hold it.
All right. Shahina, any take on GIC RE? Rajesh Maheshwari from Singapore is holding almost 600 shares at an average price of 433 rupees. What's the outlook on this particular stock for a long-term perspective? Any take?
Tracking it.
All right. Kunal, any on the technicals, if you can help him with?
Yeah, I think it's a very strong kind of a chart. The stock had run up, I think, exceptionally well in the month of, if I'm not wrong, I think December or November. And I think it moved from 200 to 300 in a matter of few days. And now from 300 to 400 is where the stock has migrated. So which means that the 300, 350 mark is acting as a fresh base for GIC REC. Typically, these kind of stocks are high beta in nature. So you would probably have to be ready for an odd phase of correction, and if that happens, you could be looking at least a 10 to 15% swing on the downside. So keep that in mind whenever you're looking to buy or add the stock. I would suggest that if you're looking to add, just maybe add 1/3 of the quantity which you are looking to build specifically for the stock, and wait out for that corrective phase of 10-15% to add further.
Alright, this next one is coming in from Venkat, writing to us from Dubai. He has Sundaram Fasteners, about 45 shares, which he purchased at an average price of 1,233 rupees per share, Shahina. He wants to know whether he should add more now in order to average the price. He's saying that he is a long-term investor, but he's ready to stay put with the counter for another year only.
I think he can continue to hold at current levels. The volumes are likely to pick up going forward, so you should hold.
Okay, moving on to the next query. This query is coming from a viewer. He didn't. Okay, his name is Rakesh Gupta, and Shahina. He has 4 banks in his portfolio: Yes Bank, Dhanlaxmi Bank, CSB, as well as Canara Bank. Okay, these stocks are not in portfolio, but he wants to enter into any of the banks at this point in time. So amongst these 4 names, if I may repeat: Yes Bank, Dhanlaxmi Bank, CSB, and Canara Bank. Do you believe any of them suggest a buy at this point in time for a long-term perspective?
All 3 look good. In fact, all 4 look good at current levels. Yes Bank is news-based. It's looking good currently. You have CSB Bank, which is, I think, valuation-wise attractive in the private sector space. And Canara Bank in the PSU space is one of the better-run PSUs. And valuation-wise, it's slightly expensive than maybe the rest of the PSUs, but still looks good for the medium to longer term.
Alright, so that's the view coming in on the banking space. On that note, let's slip into a break on this edition of Buy Now, Sell Now. When we come back, we'll continue taking your query, viewers, so don't go anywhere.
Welcome back to Buy Now Sell Now, show where we get you answers for all your stock-related queries. And continuing the same, Kunal, what's your view coming in on UTI AMC? A viewer named Hitesh has bought these shares at a price of 678 rupees. He's looking to make a switch to Tata Technologies at this point in time. But will that make sense? What will be your advice?
Well, I think you can continue to hold on to UTI AMC. The stock is just into a developing phase of a breakout. I think the volumes and the recent price patterns have been a bit more stable. What encourages is the last 1 week back volume for UTI AMC, where the stock moved up significantly higher. We saw a similar chunk of volumes in June, July 2023, when the stock was almost at 800, and from there the stock has migrated towards 950 levels, which means if you expect a similar kind of a trend transition, then you could be looking at possibly a target of 1050, 1100 for UTI AMC. So I would probably expect more upside, so would suggest a hold.
All right, the next one is coming in from SK Saran for you, Shahina. He wants to know your opinion for a fresh entry in particularly for TVS Supply Chain at the price of around 195 rupees per share.
TVS supply chain actually is getting good investors coming in. So the investor can actually add at current levels and then look for a target close to, it's better he buys it at slightly lower levels if possible. So then he can look for a target close to about 210, 212. But I prefer he buys it at slightly lower levels.
All right, but Kunal, what's your take on the PSUs and any good PSUs for a fresh investment that you spot at this point in time? This query is from Kiran Krishnamurthy. He's looking to make an investment for the next 4 to 5 years, either from the banking space or from the PSU space.
I think it's a bit too late or too steep in terms of buying these stocks at current levels. I understand that these stocks have gone through a euphoric rise for themselves, but I think these are the kind of times where you have to have a lot of patience and look out for strong dips, strong corrective phases when you're looking to buy. I would suggest to wait out for maybe a phase of another 2-3 months where these stocks may possibly get into a corrective phase. I think that's where you should try and take opportunity of buying the dip into these names rather than buying the rises into these stocks.
All right, the next one is coming in from Leo, and this one is coming in from Pawan. He's writing to us from Hyderabad, and Pawan is one of our avid viewers. He's actually written to us on Twitter also a couple of times. We've not been able to take his queries. He wants to know which sector or the stocks are the best to buy right now. He wants to know, should he look to invest in banks or OMCs or infra or hotels or a combination of stocks from these sectors makes the cut? Shahina, first let me come to you on this query.
It's always better to go in for a combination because usually there is sector rotation, but the sectors that he has picked up are the ones that seem to be going to be doing better in the next couple of maybe months. You could take banks. PSUs are doing well, so you could look at PSU banks also to add to your portfolio. You have OMCs. We just discussed HPCL does look good even for the medium term going forward. You have other sectors also that you can look at, such as IT, which actually has been consolidating. So you can take your pick over there. Of course, the top pick remains the most expensive, TCS. At the same time, you can look for smaller stocks like Persistent. So I think there are various sectors. Better to pick up some good quality stocks, build your portfolio with some of the performers in each of the sectors and hold for the medium to longer term.
But Shahina, what's your take coming in on L&T? A viewer named Lakshmi wants to know that at this point in time, given the order book and the valuation, is it right to go for a fresh investment in L&T?
I think L&T it is better to wait and then pick it up at any dips, because there is some concern coming in as to the order book, and the stock has given you a good return. Valuations are now getting a bit stretched, so better to wait for dips to buy.
All right. This one is coming in from a viewer, Srinivas, who's asking us about L&T. 200 shares at a price of 1,500 rupees per share for the long term. Makes sense to stay put with this one. Kunal, let me take this query to you actually. Do you think that stay put with L&T, the buy price is 1,500 rupees per share? Do you think that some more rally left in this particular counter is surpassed 3,300?
See, I think the only reason why you can sell L&T or you should be selling L&T is if you're bearish on India. If that's the case, only that's the reason why I would suggest a sell on L&T. Otherwise, if you're bullish on India and Indian equity markets over the medium to long term, I don't see any reason why you should be looking to sell the stock. I think it's a fabulous stock. It has a 70% plus, 75% plus correlation with respect to the Nifty over the long term. That's what we've seen statistically. So that also indicates that whenever the stock moves up higher, it has a direct impact or correlation with respect to the benchmark indices. So bullish on India, bullish on L&T, I would suggest a hold.
All right, but Kunal, once again coming to you, because the next query that I have is on JP Power. I don't think that on fundamental basis we have lot much to track at this point, but the stock is been doing pretty well, and a viewer named Sunita Rai from Bangalore has been holding the shares from a price of close to 20 rupees. On the charts, anything that you're spotting?
So I do track the stock, but I think over the last 3 or 4 days, if I'm not wrong, it's been hitting upper circuits for itself. The volumes have been quite interesting. In fact, the chunk of volumes which had been extremely positive for JP Power was in the month of November when the stock was at 14 rupees or 14.5 to 15 odd rupees broadly. So that indicates that that now forms a base for the stock. I would suggest that if you're already holding on to the stock, you can continue to hold on. Keep a, say, a target range closer to 25, 26. But then, as I said, it's a circuit, stock generally tends to get into upper circuits for every short duration of price uptrend. So you can keep on revising on the targets on the upside as well as trail stop losses, which currently would be placed, I think, closer to 15, 15.5 rupees.
All right, so that's the take coming on JP Power. Moving on then, let me take this one from another Srinivas, who's a senior citizen, writing to us from Navi Mumbai. 100 shares of Cummins at 2,000 rupees per share. He is okay to keep it for the long term, but should he? What's your take coming in on this one? Shahina, 2,000 is the buy price. The stock right now is around 2,300. Over the last 15 minutes or so, a sharp fall on the counter, but it's done well for itself over the last 6 months. Should he stay put with this one for the longer term?
Yeah, he should. Continue to hold a very strong performer in terms of price and likely to continue to do well in the longer term.
That's the take coming in on Cummins. But with this, viewers, it's time once again to slip into a very short break. Don't go anywhere. We'll be right back.
अन्य फिनिश प्रोडक्ट्स के क्षेत्र में भी एक बड़ा निर्यातक बनकर उभरा है। मैं आपको ऐसे कई और उदाहरण दे सकता हूं, लेकिन इन सारी बातों का मूल ये है कि भारत इस समय एनर्जी पर इतना निवेश कर रहा है जितना पहले कभी नहीं हुआ, और इसलिए आज दुनिया में ऑयल, गैस और एनर्जी सेक्टर से जुड़ा करीब करीब हर लीडर भारत में निवेश करना चाहता है। कितने ही लीडर्स इस समय मेरे सामने बैठे हुए हैं। हम पूरी गर्मजोशी से आपका भी स्वागत करते हैं। साथियों, सर्कुलर इकोनॉमी भारत की प्राचीन परंपरा का हिस्सा रही है। रीयूजिंग का कंसेप्ट भी हमारे जीने के तरीके से जुड़ा हुआ है, और ये बात एनर्जी सेक्टर से भी उतनी ही जुड़ी हुई है। पिछले वर्ष G20 समिट में हमने जिस ग्लोबल बायोफ्यूल्स अलायंस को शुरू किया था, वो हमारी इसी भावना का प्रतीक है। इस अलायंस ने पूरे विश्व की सरकारों, संस्थाओं और इंडस्ट्रीज को एक साथ इकट्ठा कर दिया है। जब से ये अलायंस बना है, इसे व्यापक समर्थन मिल रहा है। बहुत कम समय में ही 22 देश और 12 इंटरनेशनल ऑर्गेनाइजेशन इस अलायंस से जुड़ गए हैं। इससे पूरे विश्व में बायोफ्यूल्स के इस्तेमाल को बढ़ावा मिलेगा। इससे करीब $500 बिलियन की आर्थिक संभावनाओं को बनाने में भी मदद मिलेगी। साथियों, अपने यहां भी भारत ने इस क्षेत्र में बड़ी प्रगति की है। पिछले कुछ वर्षों में भारत में बायोफ्यूल्स का एडॉप्शन तेजी से बढ़ा है।
All right, that's the Prime Minister who's addressing at the India Energy Week. We will have around 35,000 attendees, and not only from India but overseas as well. And Prime Minister making a very pertinent point in that address, saying that the large part of the FY25 capex will be spent on energy security. Also mentioning the fact that India is looking to raise the refining capacity to 450 metric tons per annum by 2030. So that's the crucial points coming in from Prime Minister at the India Energy Week. But let's continue taking your query for as much time we have at hand. And this one is coming in from Sudha. And Sudha has HDFC Bank and SBI in her portfolio, which have not given good returns over the last 2 years. Now she wants to hold SBI but look to exit HDFC and instead look to buy Union Bank or Dhanlaxmi Bank, or for the matter of fact even Yes Bank. Is that an advisable move? Does it make sense to move out of SBI, move out of HDFC and look to park that money in either an Yes Bank or a Union Bank or a Dhanlaxmi Bank? What's your take, Shahina? Does it make sense?
Well, for the shorter term, it may make sense because HDFC numbers disappointed just about everybody. But at the same time, if you're really talking of a 3 to 5 year portfolio, it's a bank that one should be buying at dips. So I am like neutral in terms of whether you should exit it as of now or continue to hold. At the same time, I think some of the other banks, like for example, Yes Bank, do look better for the shorter term, medium term. So one, if you want to switch for the shorter term, then yes, you can switch from HDFC to Yes Bank. But for a longer term investor, one should remain invested.
Long-term investor must remain invested in HDFC Bank. Kunal, do you have a different view altogether if it's a 2-year time frame, knowing that HDFC Bank has not done much over the last 2 years? And also SBI, you saw a sharp rally in the counter and then it has actually consolidated at those levels. So what should Sudha do? Move out of HDFC to Union, Dhanlaxmi or a Yes?
I think you should absolutely refrain from doing it. I think you should stick with the likes of SBI, HDFC Bank, and in case if you have any of the other private sector banking names, the formidable ones which have been underperformers. The best way to try and look to gain profits into these stocks on a long-term basis is to buy good quality names in the worst times for themselves. And they have been stalwarts over the last 2 decades. We've seen the price trends for these stocks and how these stocks have managed to ride through different cycles of markets as well as economy. I would probably believe that these are quality names which you should not sell just to get an additional boost of a quick single-digit percentage points into other banking names. So if you have extra capital, then you can deploy into these other smaller cap, mid cap PSU banking stocks. But I think you should not tinker with your large cap portfolios, especially those banking names.
All right, Kunal, once again a query for you. This one is on Vodafone Idea, and Giridhar is holding the shares from a price of 19 rupees, but he's concerned about the fall in this particular stock. So any take on this one?
See, I think you should continue to hold on to the stock at least as of now, because the stock has come back towards a 50-day mean reversion, and possibly there is a chance that the stock may at least come back towards 16 to 16.5 levels. So I think in that sense, you could probably get a better exit, or you may look to re-evaluate when the stock reaches that 16 plus levels.
All right, let's take this next query that I have. We are skipping rapid fire today because Shrishti has decided to take extra queries today. So let me take this next one coming in from Balan, and he has a large quantity of Yes Bank and he's making 20% profit in this. He wants to know whether he should sell and look to shift to Apar Industries and Everest Canto instead for a period of 1 year. Shahina, what's your take? Book out profit of Yes Bank is making 20% profit.
No, I think he should continue holding Yes Bank for now, and I believe he will see higher levels where he can take an exit and switch. So as of now, it's better to stick to Yes Bank compared to the other two.
All right, that's the take coming in on Apar Industries. But with this, viewers, we are completely out of time in this edition of Buy Now, Sell Now. Thank you so much, Kunal and Shahina, for joining us and helping all our viewers resolve their stock-related queries. But with this, viewers, it's a goodbye from me and Cheryl and the entire team who put the show together. Thanks so much for watching, but don't go anywhere. Markets at noon will take the action ahead.